This is Alan Bush with ADMIS. In the stock index futures, we did see prices lower in the overnight trade. This due to weaker than anticipated economic data out of the Eurozone and also out of China. However, we have seen somewhat of a recovery with the 9 o'clock U.S. economic reports coming in stronger than expected. In fact, we had 3 9 o'clock numbers, all better. In fact, in some instances, quite a bit better. So even though we're a little bit lower, still on the day in the stock index futures, I think we can see a move to higher on the day. Longer term, we still believe that the bull market will be with us for the balance of this year and well into next year for all of the indices, especially for the S&P and the Dow. Over in the currencies, we did have some pressure in the euro currency in the overnight trade with those weaker than expected Eurozone numbers. And some recovery, though. In fact, we were able to trade higher. So starting to see the euro currency ignoring some bearish news from time to time. And on balance, some of the numbers in the Eurozone, of course not counting today's reports, but for the last week or so, there have been some better than anticipated numbers. So I'm starting to get the feeling that we are very close to making lows now in the euro currency. Now, this is a very crowded trade. Many traders are very bearish and very short the euro. So I just think that there's enough on the downside. So if I was short the euro, I think I'd be covering in here and instead focusing on the short side of the yen. We have some renewed political problems in Japan, a very weak economy there. So I think the yen is the one to be trading from the short side with what we're seeing. And I would refrain from doing a lot in the euro currency. And in fact, I would not be short European currencies at all now with how those currencies are responding to economic news. Over in the interest rate markets, we did see futures higher in response to those weaker numbers in the Eurozone and in China. Futures coming off of the highs with the 9 o'clock U.S. reports, which were, I would have to say, very bearish for treasuries, and yet they're still higher on the day, giving back just a small portion of the gains. So that in itself is a sign of strength for the treasury markets. So longer term, still thinking we can see higher prices for the treasury futures market, especially for the long end, the 30-year treasury bond futures. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.